Hi, I'm Kals, host of The Comparable, the series in which each episode explores two companies that are building similar solutions in two different emerging markets. We're doing something a little bit different today. And as you noted, there's been a little bit of a lag between our episode 5 and this one. Let's chalk it up to the fact that it was August. Everyone was on vacation, except me, apparently. I was not on vacation. I always miss the memo about going on vacation in August, but I just decided to take the L and just say, let's come back in September, which we are, and come back with a bang on the second half of the season. And I decided rather than starting and keep going in the trajectory that we are, which we will get back to in episode 7, for this episode, I wanted to do a little bit of a palate cleanser where we zoomed out a little bit and did do something that we're calling the Comparable Compact, which is a minisode with an investor that I admire, that I find interesting, in emerging markets who, I think has really great thoughts and can kind of help us really reflect on what we're looking at in emerging markets so far. I think if you've been listening and watching the episodes, which if you have been, thank you so much. I've been really kind of blown away by how similar things are and also just how similar themes are, right? I think we're seeing so many companies that are coming up in emerging markets there's a lot of pattern matching. There's a lot of playbooks that we're seeing develop in more sophisticated ecosystems that companies and other ecosystems can really learn from in terms of what to do and what not to do. And then also from an emerging market perspective, the types of businesses that emerging markets breed are really kind of more resilient in a lot of ways because of the amounts of challenges that they face, the capital scarcity, what they have to adapt to in order to make their business work. And I'm really excited today to have on my first Comparable Compact, Alex Lazarow. He is an investor, he's an author, he's a thought leader, and he's been talking about emerging markets for a long time. And he invests globally. So he'll often take a business idea, and whether it's in the US or otherwise, and really kind of invest in businesses that really reflect that idea, that model elsewhere. And so he's, invested across Latin America, Africa, Asia. And so really excited to have him today to really kind of reflect on, some of the trends that we're seeing in emerging markets, how he's thinking about things, this concept of camels versus unicorns, which he talked about in 2020 at the time that blitzscaling was huge. And so excited to have him today, excited to really kind of delve into and chew a little bit on what we've been seeing so far in the season. So let's dive in. My guest today for our very first minisode, we're calling it the Comparable Compact, is Alex Lazarow, an investor, author, and thought leader focused on innovation and entrepreneurship outside Silicon Valley. As the founder of Fluent Ventures, and he was a former partner at Cathay Innovation and Omidyar Network, he has spent his career investing and studying startups across Africa, Asia, Latin America, and other emerging markets and other ecosystems outside of Silicon Valley. He's also the author of Out-Innovate, a playbook that challenges the dominant Silicon Valley narrative and highlights how the world's most resilient and impactful startups are emerging from what he calls the frontier, startup ecosystems outside the valley like Delhi, Nairobi, Sao Paulo, and beyond. So welcome, Alex. I'm really excited to have you here today.
Thank you so much for having me.
Yeah. And I feel like this is such a timely conversation, just given what's, happening in the world right now. I feel like we're becoming, the world is becoming, especially the US is becoming much more isolationist. So having this really global conversation, especially halfway through the first season of the podcast, I'm really excited to talk about it. And, what I love about what you talk about in your book, and also, I love your newsletter, 99% Tech, and what you talk about on LinkedIn is that you believe that an innovation power, there's like a diffusion of innovation, right? That the power is shifting. And instead of being just concentrated in Silicon Valley, new technologies and models are spreading globally. And, I've seen this too as an investor, and, there was often this first wave of companies that were just kind of photocopying what we saw in Silicon Valley and just implanting it into their, respective ecosystems, and then starting to become much more nuanced versions and really kind of becoming very localized. And so I'm curious for you, as we talk about this diffusion of innovation, why do you think that is happening and what led to it to begin with? And then within that diffusion, what kind of models have you seen really stick?
Yeah, man, that is a very big question.
Yes, try to answer it succinctly. Go.
Well, I think maybe I'll start by just even reacting to the point you made around borders are coming up around the world. It's not just the US, of course. I actually think that this is actually going to accelerate this diffusion of innovation in the sense that it's becoming more and more important for ideas to become permeable across geos and for entrepreneurs in their geos to learn from each other. What I think has happened is if you look back like a little bit over 10 years, like in 2013, 4 cities in the world had created a unicorn, 4 only. Today, the number is 156. So truly an explosion of tech, but not just tech, but tech successes, like big companies. I think that's happened for a number of reasons. One is it's become way cheaper to launch a company. You know, wave one of that was what happened with SaaS, with tech know-how, et cetera. Today, on AI, I think it's going to rapidly accelerate this and lowers the cost even further. I think second, as there are companies getting built in a bunch of ecosystems, it is training the next generation of founders. They're spinning out and doing the next thing. A bunch of local VCs, and you know, we're both kind of in this fight as well. And then I think 3 is some of these companies become successes. It actually becomes motivating and North Stars for a lot of folks. And so I think we're starting to see this virtuous cycle. Like, I think it's very early in a bunch of places, but I would argue in a bunch of other ecosystems, like Sao Paulo, for instance, or in a bunch of places in India, like, we're starting to see real virtuous cycles. And if you look at the Midas list today versus 2013, just maybe to put a loop on that, Alan Taylor from Endeavor wrote a piece on my newsletter, 99% Tech, about this. Don't quote me on the numbers, but order of magnitude is correct. Like in 2013, 100% of the Midas list were people that had made their money on a deal based in Silicon Valley or in those 4 cities. And today, 25% are from folks in China, 25% are rest of the world outside the US, 25% roughly in the US outside Silicon Valley, and then the rest kind of Silicon Valley, whatever, New York, Boston kind of thing. So I actually think we're not, it's not the end of the story. We're still midstream. I think if you forward another 10, 15 years from now, I think we'll see all this continue to accelerate. But I think that's what's happening today.
Mm-hmm. And what do you see like within that movement that's happening? You know, we've seen, as you mentioned, like, you know, we saw SaaS and everything come up in the beginning. You were talking about like AI right now. Like, what are the types of models that you think really stick in emerging markets?
Yeah, and by the way, this is the thesis of our fund around Fluent as well.
I know.
I think that as we have seen around the world, the biggest companies in a lot of markets look pretty similar. Like if you look at the top tech company in China, India, Africa, Korea, Latin America, Southeast Asia, whatever, the number 1 tech company is the same. It's a local version of Amazon. The number 2 and number 10 are basically the same. They're a digital bank, they're a buy now, pay later, or they're a local Uber if Uber didn't win. I think what's happening is that there are massive problems across, financial services and the underbanked, across health access, around a variety of things in commerce. SaaS is kind of a tool and a go-to-market approach, but like in a bunch of industries, where you might solve them, most business models don't have global network effects. Like Facebook is natural as a global company. Like there's actually more value to me here in the Valley if you're on it in DC or my friends are on it in Southeast Asia. But for Uber, it actually doesn't matter, right? In most business models, it doesn't actually matter. What actually matters are micro network effects. And so I think that what we've seen globalized, or business models have 3 characteristics. One, they have local or regional network effects. So it doesn't actually matter whether it's Silicon Valley or whatever other company that's raised much money. Actually, local execution matters. 2, regulated industries. And I think it's one of the reasons we've seen a ton in fintech. It was kind of the first wave. I think there's a bunch of other reasons, being that's a kind of a foundational layer that enables other things. But I think that's real. And I think lastly, operational complexity. Where real go-to-market knowledge in markets makes a lot of sense. And so while the inside of the business model will be global, the winner is going to be local. I'll make one comment, which is it used to be that we would take a Silicon Valley idea and rocket to Durant style and get replicated elsewhere. I don't think that's what's going on anymore. Even among Silicon Valley, I'll just like talk about Uber for a second, which is like very much Silicon Valley. Like Uber didn't even invent ride sharing; it was another company. Uber definitely scaled it internationally, but even among that, if you look what's happened, right? Like the number 1 ride-share company in the world is actually in China from a number of rides basis. In Southeast Asia, I love the story of Gojek, where I interviewed Dean for my book, and he talked a lot about his vision, which is in the morning he'll pick people up, in the evening he'll drive them home, but during the day he'll deliver food, deliver doctor visits, deliver medication, whatever. his business model looked more like a super app, borrowing insights from China. And if you fast forward the Uber story, it's no surprise their fast growing segment is food delivery. And they've tried a bunch of these other financial services things. I actually think increasingly innovation is coming from everywhere and scaling everywhere. And I think that's one of the things that's most exciting.
Yeah. And I think I love what you say in terms of, in some ways, like the inspiration being quite global, but execution is local, right? And that's really what sets people apart. And, you know, some of the models that you mentioned can be quite capital intensive. And I think what's interesting, you know, especially for like the Ubers and all of that of the world, obviously e-commerce is like that too. But in 2020, you know, you wrote a piece for, you know, HBR, Harvard Business Review. You would talk to you mentioned that startups should think like camels instead of unicorns, right? Because of like the scarcity of capital, because of entrepreneurs needing to be really resilient, needing to be much more, I guess, frugal when it came to how they thought about their business and building their businesses. And so I think it's really sage advice, because I think in emerging markets, like we see that, right? Where it's really necessary to think about your bottom line from day zero. I've definitely see that in Pakistan. But can you talk about more, you know, this idea of camels? Like, what are the types of business that you've seen that are true camels globally? Either that you've been in and you've invested in, maybe you've talked about in your book, or, you know, companies that you've been impressed by.
It's so funny. When the book came out, I feel like the camel concept was a little heretical, right? Like this was the age of blitzscaling. And
like growth at all costs was like the cool thing to do, right?
Growth at all costs. And what I was seeing was that outside Silicon Valley, particularly in markets where there was less capital, where it wasn't a given that you'd be able to raise in a 1 to 3 month window if you needed the capital, where there weren't as many local investors, the default prerogative for a long time before this like short window of madness was building businesses that had solid unit economics from the get-go. In Silicon Valley, we talk about the J curve. In a startup, you like burn a lot of money, eventually get profitable. I noticed that a lot of the best companies actually had these like mini J curves. Like, yes, they were like unprofitable for parts of the time, but they controlled the levers to try to get to profitability much earlier. And, you know, last episode, you had the folks from Deal Card, like talking about that model, comparing India. It very much, that's what's going on in a lot of these places. And since the book came out, we obviously had COVID, we had the startup meltdown, we had SVB. The camel concept was like much more come to the front lines. And I will say the camel concept isn't about like, is there a business model as camel versus not? It's actually more like a philosophy. I actually think camel versus unicorn is a little bit of it's
a mindset.
False comparison. Is that a unicorn is like a number, and a camel is like an approach to start building. Like the opposite of this camel is blitzscaling. And I actually think that if you were going to play a story 100 times, if you were to play the Uber story 100 times, we know that in this version of the story, it was a big success. If you play that story 100 times, the argument of the camel is that you will be more likely to get a multi-billion-dollar unicorn as an outcome with this approach than another for most business models. Take away the like true winner take all, like market. Like for most companies that we're talking about here, I actually think that approach is the more resilient one. And so I'll just put one last point on this, which is even for the exact same kind of company, you could see different approaches. Like you could see on food delivery, like Grubhub started in Chicago. When I talked to Mike Evans, one of the co-founders, he talked about it every single round they're profitable. Like it is possible, even in these capital intensive models, to take a camel-like approach. And so that's really kind of the philosophy that I'm seeing. I'm actually seeing this accelerate in the age of AI. Like I actually think AI is going to allow companies get to a product, get to first revenue, get to testing much, much earlier without having to spend and invest quite as much money.
Yeah, 100%. And I think it's so interesting that you say that, right? Because then you're right, when you were writing about camels in like 2020, it was like when, especially with liquidity being so high, interest rates being down, international VCs were throwing money at emerging markets. And we just saw blitz scaling happening in a much quicker way because it was thrown and then it was retracted. It wasn't retracted, it just kind of stopped in a lot of emerging markets, including in Pakistan. And so you had all of these companies that kind of bought into this romantic vision of like, oh, maybe we will become a Silicon Valley because we have all this money that's thrown at us. And then all of a sudden when that dried up, it became very clear that the winners were going to be the ones that had been thinking like camels from day one, right? That the ones that were going to just put their heads down and figure it out. I wish there was more, and we're going to talk about like the types of capital that's needed for these markets, because I wish we had, like, you know, as you mentioned in the last episode, you know, we talked about e-commerce in India and then in Pakistan. And City Mall was able to raise like $112 million, right? And in DealCart's case, they've raised $8 million. And it's like, I wish we had as much as, well, it's great that we're building camels and there's resilience. I wish there was a little bit more capital that existed, because I think that it's great that it's being resilient, but it's taking just so much longer to get to where they need to go. And I'm curious for you, because I've been having this conversation a lot with my partner, Misbah. We've been wondering whether or not, venture capital is the answer in emerging markets, where these kinds of businesses, that kind of mindset needs to exist, where venture capital, maybe in the way that we know it, right, is that, and that itself is being challenged, right? There's so many articles right now about, is venture capital dead? Because also some of the most like OG Silicon Valley firms are rethinking their model too. But I'm curious about, whether venture capital is the answer in emerging markets. Or if not, what kind of capital do you think is needed to meet businesses where they are in these ecosystems?
I definitely don't think venture capital is for everyone. First, I think let's be specific of what we're talking about. Like when we say venture capital, I think what we're talking about is a 2 and 20 fee structure in a VC fund with a 10-year fund that has a high failure rate in a bunch of companies and thus needs a couple home runs to return the whole fund. Like that's kind of one version of funding early stage startups. I think it's possible to imagine different versions of funding early stage startups, like different business models. There are a bunch of very successful kind of format one venture capital firms in emerging markets that have succeeded in a bunch of different geos. Like I actually think that model will work. It just doesn't work for every type of company. And so there are some companies that are going to take longer to get to exit, that are going to be much more reliable on their outcome, like Camels and Profitable. I think AI is creating a new model around seed strapping. That means you only need one round and then you can be profitable forever. And so it's not clear to me that the current model of venture capital is going to work for the entire universe of companies. And so a couple of things that I think are interesting today, I wrote a little bit about this in the book, but like evergreen funds that extend the timeline beyond 10 years, I think make a lot of sense in markets where exits are less proven. I'm obsessed with the idea of revenue-based financing, not necessarily as an alternative to venture capital, although it might be, but certainly as a complement to it. I think when you have product market fit, when you know you spend X dollars on customer acquisition cost on a consumer company or on a SaaS business, using venture capital, the most expensive type of capital out there, to fund that is probably not the best use of money. And if you could find repeatable sales models with that, that's reasonably interesting to me. And I think it's pretty powerful. I think in the US, we're seeing this blend of private equity and venture capital emerging around AI roll-up companies. I think we're going to see more of that, where this used to be a bifurcation of thinking, where we're actually seeing founders that are good at operational execution and good at layering in tech. These are a bunch of experiments happening all at once. I think we're going to see some of these really work. And I actually suspect if I was a founder today, I would think a little bit about how do I actually rethink the whole stack? Like how do I raise venture capital from aligned VCs? How do I think about revenue-based financing? How do I make sure the timelines are aligned? There's a bunch of these continuity funds and secondary funds emerging to be able to give early stage VCs liquidity. So I think it isn't that one model is wrong and others are right. I think it's much more that we need a greater diversity of options for a greater diversity of types of companies that are emerging.
Totally. I'm such a believer in that as well, especially because, in markets like Pakistan, which is I know well, but most emerging markets, a lot of the businesses that are coming up are kind of more traditional SMEs, right? And so startups are just such a small percentage of that. And if you think about traditional SMEs, venture capital is not a fit as an asset class for that type of business growth, right? And so you really need to have, as you mentioned, like revenue-based financing, you need debt capital, generally, like you need all kinds of options to exist for businesses to kind of have a suite of capital and capital providers to be able to service you. And I think the challenge is that, especially for VCs, right? It's like we want to think more creatively, but also to your point, right? Flourish as an example, as an evergreen fund, via the Omidyar family. And they're able to do that because it's like really, they don't have to worry about fundraising. But a lot of LPs, limited partners, and I'm starting for the audience, like who don't know what LPs are very conservative when it comes to the types of funds that they want to invest in, right? So it's like we're trying to be creative and build for our markets and what the realities are. And at the same time, it's like you don't have a lot of creativity that's servicing our types of funds, right?
I think just on the LB standpoint, I think it's a real issue. Like liquidity is a real issue. If we are working for the retirees of a pension fund or a family office or just individuals that want to buy a house one day or they want to do whatever, I think figuring out a path to get people their money back and then the option for them to reinvest, I think it's super important. One of the things that's exciting, it's just my point earlier that we're so early stage. In 2013, like there was only 4 cities that created a unicorn. Like it didn't even matter what exits were, a lot of these markets. That's super early, but there wasn't enough volume of technology companies. Today, that's really changed. I think we're still early days on kind of the exit markets getting developed. 3 years ago, the largest IPO in the world was a Brazilian company, Nubank, of course. The year after, the largest M&A in the world, up until December, so out of 11 of the 12 months of the year, was a Brazilian company, which is Pismo. And so we're starting to see this, right? We're starting to see these consistent exits happening in a bunch of the more mature ecosystems. I think that's a leading indicator. And so it is true that today the venture timeline takes longer, and I think that's a construct of where we are in the market development. I'm hopeful. I'm certainly betting my career on the notion that a lot of this infrastructure is going to continue getting built. And so we're going to see hopefully timelines compress, more acquisition track record, more IPOs happen in a bunch of these regional markets.
Yeah. And it takes like funds like us that kind of have to do that front row, like hard work, right? To kind of get us there as well. I want to kind of get to the trends that you're seeing. You've written a lot about stuff that's coming up that you find interesting, but maybe to share for this audience, what are some of the trends that are most interesting to you right now, both globally and specifically in terms of emerging markets? I know that you tend to take an idea and then it doesn't matter geographically where they are in the world. So I'd love to hear more about the ideas that are exciting to you right now. And then beyond the hype that some startups often get, are there companies globally that you think just get it right that you're particularly excited by? Like you don't have to call out like a favorite child in your portfolio, but maybe just companies that you think are super exciting right now.
Let me start with the first question and maybe just so you can explain for the audience our model. Our strategy is around geographic arbitrage. We look to find a business model we love that exists somewhere, that has great unit economics, that has a path to exit, that solves a really important need, largely fintech and healthcare and commerce. And then we look to do things that look similar to that in other markets. So that's our strategy. And so every quarter, we're basically trying to focus on a couple of things that we think are in that bucket and trying to meet as many. A couple of those I'm really excited today, I'm thinking a lot about. And these are kind of more macro themes. I talk about business models within that. I think we're seeing a rise in kind of small business entrepreneurship. Like it used to be that if you were a dental office in the US or a doctor's office in the US, it would make sense to sell private equity like that with the roll up because there's efficiencies of scale and scope of having a shared back office. Today, I think you can rent scale with software. And so it's a really investor company called Zen Business, which does kind of company formation for small businesses. And then they, help with financial services, help with the website, help with kind of everything in one single pane of glass. I've invested in similar companies like that in a bunch of different geos. I'm obsessed with this notion of like, how do you actually create neo small business, but rent and scale through software? I think another one, which is on the other end of formation of business, I think we're seeing a giant wave starting with boomers retiring and what's happening with as there's generational transfer. And everyone's talking about this from the healthcare perspective. I'm interested in it from the business perspective. Like what happens to small businesses? In Japan, one of the most interesting unicorns that just went public is a company called Masukin it's an AI-driven small business investment that like really brings down market what Goldman Sachs does for big companies to very small businesses. And it's only possible because of AI. I'm seeing that model get replicated in Europe and US, and we're looking for this. I'm now starting to see it in a little bit of emerging markets. So we've been really interested in those. And the third, excuse me, I mentioned this street seed strapping. I think that we're going to see AI roll-ups become a meaningful play. I'd like to incubate a couple companies in this category. We're a hybrid. We do venture and we do some incubation. That's something I'm thinking a lot.
Can you tease that a little bit more? Like what does AI roll-up mean?
If you think about what's happening with generational transfer, a lot of these small businesses are getting having to get sold. Well, imagine instead of selling it to another buyer or whatever, you could imagine having a technology company partner with a retiring owner, perhaps this company in the US called Team Shares, which does help sell it to the employees, for instance. So you could like have employee ownership as part of it, but also layers in a bunch of software tools, and I would say now AI workflows. So really make it much more efficient to serve the customer, to really grow gross margin or EBITDA, ultimate EBITDA margin, while actually preserving the high customer service business. I've started to see that play out in healthcare, accounting, and the other things. Largely professional services, one category. And so we've been spending much time there in the US, internationally.
That's cool. Is there any, you've been mentioning AI a lot in terms of how it's going to bring costs down for a founder sitting wherever in the world in terms of building their company. For anyone that's kind of looking at like the AI boom, I was just listening to The Daily the other day where we talked about the talent wars that are happening in AI, which is like insane. So I feel like it's so hard for someone that's sitting in a market that's outside of Silicon Valley to look at what's happening there, the amount of money that's being thrown there, and to know how to leverage it all within, how to make it transferable to what they want to build. And I'm just curious if you have any advice for someone sitting wherever in the world, right? It's like, you don't have to build. And this is what I always tell people. I'm like, if I see another like AI agent company, I'm like, there's too many AI agent companies out there, right? But it's like, how can you be leveraging it as in service to something? I'm curious what your advice would be for a founder sitting wherever who might be listening.
Yeah, I will say, I'm not invested in anything foundational AI.
Okay.
Because our thesis really is around these business models, local network effects, operation regulation. I think we're going to see some great companies. I think those will have global network effects. And it might come from anywhere around the world. I think a lot of them will come from Silicon Valley as well. However, I actually think that if you're solving, like the most important thing is like, are you solving a really important customer need? It's not clear to me that we're going to need a new, we went from a, in-person bank to a web bank to a, mobile first. It's not clear to me that like AI is the platform shift that we're going to have a new bank, because like I actually think customer reach, customer trust, solving customer needs will remain paramount. And where I've been interested in the application of AI is when you're solving something that wasn't possible before. You're really reaching the customer. I haven't done any of the kind of like a tools for others, but you're really like reaching a customer in a unique way. It's something that wasn't possible ever before. And and that creates a moat. Like it's not something that you're just tapping together. I think we're seeing a proliferation of AI agents for sure. And the barriers to building these has come down, and thus the moats have also come down. And so I worry, I've struggled a lot as an investor in making a bunch of bets in kind of the next age of the company.
Yeah, exactly. I'm the same, right? And then also like every time I see like an AI driven something on someone's deck, I immediately I'm like, okay, let's dig into this. And oftentimes there's like a lot of smoke and mirrors, right? It's not really AI. So really thinking about, there's so much that's trending, and really thinking about building something that's not trying to retrofit into the trend, but instead really solve what you're saying, solve a problem, right? And how can leveraging some of the tools that are out there make you achieve that faster, reach your users in a unique way, as you mentioned, automate quicker. Like that's what I'm really excited to see in the world, is like how quickly we can build companies for such a fraction of the cost, and also much smaller teams, right? I don't think we're going to see really top heavy businesses in the future as a result of this. But thank you, Alex, so much for being part of this episode. This has been a really fun way to kind of create a palate cleanser as we kind of get into the second half of the season. So really appreciate you joining today.
Thank you so much for having me. This was a lot of fun.
Thank you. Thanks for listening to our mini-sode with Alex Lazarow. Please subscribe wherever you listen or watch your podcasts, YouTube, Spotify, Apple, all the things, all the places. And we'll see you next time. We'll be back on our regular schedule, and we'll have a regular comparable episode coming up in the next few weeks. Thank you. Bye.